السلام عليكم، مرحبا بكم في قناة يس فوركس.
We're working with techniques on how to draw trend lines, and I'm showing you the usefulness of actually drawing trend lines from high to low or low to high. Here's another instance where we're working with a much shorter term time frame. If you recall, the previous price chart we were working with was a US bond price chart, and that was of the weekly chart level. Well, here's a simply 60-minute price chart of the E-mini Dow. And again, simply from an extreme, here's a low, to the high of the move, and then take a parallel to the most extreme portion of the move, which would be this low right here. And as you can see, when prices begin breaking below it, that signals that the previous move is indeed done. You can actually utilize this approach with much sharper moves as well, i.e. this decline here. When prices begin moving above it or closing above it, then that's a good indication the previous move is indeed done. Now here's a question for you. When is a trend line break a trend line break? Some people like to utilize closes above or below trend lines as an indication of a trend line break, but for me, what I like to do is I like to utilize, just to go back to this example here, I like to see price action begin moving above or below a trend line on a high or low basis. And what I mean by that is, for example, right here we actually did see some closing price action below this lower trend line here, but I don't really constitute that a legitimate break of the trend line. What I like to see personally is new highs or new lows above or below the trend line. And as you can see on this bar right here, the high of this bar was below the trend line. So this bar right here I consider a legitimate break of the previous trend line. Let me move the chart over and expand that a bit and readdress the question to make my point as clear as possible. When is a trend line break? When does a trend line break actually occur? What constitutes a legitimate trend line break? Well, in this instance, what I'd like to see is not closing price action above or below a trend line, but new highs or new lows above a trend line. And again, the reason why is, like for example in this instance here, we did close below this trend line. However, it wasn't until 2 or 3 price bars later, right here, where the high of the bar is actually below the trend line. This, I believe, constitutes a legitimate break. However, this would be a false break. So that's one way you can actually use trend lines to identify when prices indeed break a trend line and what constitutes, again, a legitimate trend line break. Okay, so let's go back to our example, and what I'm doing is just showing you briefly some examples of how to draw trend lines and how useful they are, drawing them from a high to low or low to high. So what we'll go back to here, we'll go back to our original example, from a low to a high, take a parallel of this line, or the slope of that advance, and move it to the right until it actually captures the most extreme portion of that move. And as you can see, when prices began moving below it, this bar right here, the high of the bar was below the trend line, signaled indeed a very nice sell-off to the downside. And you can actually utilize this technique with much more impulsive moves. It's the same approach. And as you can see, these few bars over here, the lows of these price bars were above this secondary trend line that we drew, and that essentially confirmed the previous move was indeed done. And with the subsequent advance, again, once prices begin closing below the trend line, and when the high of the price bars are below the secondary trend line, that indicates that we've basically seen an end to the previous price move and we're beginning a new price move. And it's a very simple approach, yet very effective. As you can see at this price bar right here, The low of the price bar was above the secondary trend line, thereby leading to an advance. And as you can see here as well. So it's just another simple little technique on how to draw a trend line that I think you can actually garner a lot of very important information from as well. So as you can see in this instance, the low of the price bars are above the secondary trend line, arguing that this is indeed a legitimate trend line break and that prices may move up for a while. So while you can draw trend lines from high to high or low to low, different extremes, you can take parallels of those lines, creating price channels. You also can garner a lot of information from a trend line by drawing them from high to high or low to low. In this section, we're working with trend line techniques and different ways to actually draw trend lines. And in this final approach, I'd like to show you an application of trend lines that has been around for a long time and that many technicians have drawn for a number of years. And it's simply called a triple fan. And the way that simply the triple fan works is you have an origin point. Well, let me go ahead and draw kind of a brief example. Okay, the premise of the triple fan is you have an origin point, and then you have three subsequent points, and you simply draw trend lines from the extremes from the origin to the initial extreme, to the secondary extreme, and then to the third extreme. What the premise of the triple fan is that if prices can manage to break through that third trend line, then that typically institutes or is a harbinger of a significant price move. Let me show you the approach. This is gold weekly, and we're going to draw a number of trend lines here utilizing the triple fan. Now the points I'm going to actually use is this price high, this price high, and this price high. So those are the 3 points of the triple fan. Here's going to be my initial trend line, my secondary trend line, and my third trend line. Now, as you can see, what the old school analysts know and believe is that the break of that third point or that third trend line typically signals a significant move in prices, which is exactly what gold did in this instance, rallying from about 330 up to about 390. And it all began with that break of that final and third trend line. And again, if you recall from the previous section, what constitutes a legitimate break of a trend line? I like to see highs or lows above or below the move. So at this point, once we saw the lows of the price bars above this third trend line, that basically signaled or confirmed you had a change in trend here, or that the trend line was indeed providing you with some useful information. Also, too, notice that if you continue the trend line over, it provided very nice support. There you go, let me draw that, for the subsequent sell-off as we came down and tested that. Here, let me find out a few more points and draw it again. Here we have a decline from the low, and I'm going to use this point here as my first point. I'm going to use this high here as my secondary point, and I'm going to use this high as my third point. And again, when prices begin closing above the trend line, especially where the lows are above that third trend line, again, it typically signals a substantial move in prices. Here, the move only pushed up modestly higher, from about 400 up to 430, but still, it was something significant. And remember, this was a weekly price chart, so on an hourly or daily basis, I'm sure this could have been a profitable price move. And here we'll draw the triple fan again. Here's our first point. Here's our second point. And third point. In this instance, prices were unable to penetrate this top line, so therefore the triple fan really didn't prove very useful in this instance. And that will actually be the case. But here, let's take another look over another example. Here's our initial high. Here's our secondary high, right here. Now you could use this high here, or possibly even this high here. But again, it's the third trend line which carries the most weight. And when prices begin closing above it, moving above it, certainly on a high to high or low to low basis, then that typically signals a significant price move, which is exactly what we saw in here in gold. And one way you could have been ahead of the crowd, so to speak, with regard to actually identifying this price move is simply drawing a trend line. So again, trend lines are a very simple approach, a very simple technique to actually apply. I find a lot of information, and in the next section I'll be talking about trade setups, my favorite trend line trade setups. But as far as simplicity goes, I don't think there's a more powerful tool, analytical tool for technical analysts other than a trend line. And again, I don't believe a trend line can be drawn incorrectly, but the value of a trend line is really determined by the importance of the 2 points you actually connect the line to. And as you've seen in a number of examples here, trend line information, the information provided by a trend line, is indeed significant because more often than not, many reactions in price will actually occur based at or near a trend line. In this section, I'm going to be looking at trend line trade setups. Now, there's a number of trade setups that trend lines do indeed offer. Even so, I'm only going to focus on 2 of my most favorite trend line trade setups. And the first trade setup I'm going to be talking about is what I call the gap. And this is what I'm referring to. Let me move the slide over. Now, one of the best trade setups I see that trend lines tend to offer is a gap either above or below a trend line. For example, this is a price chart of oats. I'm just going to draw a simple trend line connecting this low and this low and extend the line upward higher here. Now, as you can see right here, price is gapped lower. This is what I consider a gap below a trend line, and I believe that this tends to be a very high profitable trade setup, or a very reliable trade setup. Now, the way I actually like to trade this move is whenever I see a gap either above or below a trend line, the bar, the high or low of the bar that does the gapping, in this instance right here, what I'll do is I'll put a sell order in place 1 tick below the low of the bar. And my stop will be the high of the bar prior to the gap. So in this instance here, this price gap right here alerted me to a potential short position in oats. And again, the way I would actually trade this trend line trade setup would be on a break below the low of this bar here with a stop at the high of the bar. And as you can see, price is pushed on lower here down to about 240. So this was a nice little trade. Now the next, and let me show you some more examples of this, because it doesn't occur that often, but when it does occur, it tends to be, again, very reliable. So let's just see what we can define with regard to the price action since that trade setup. As you can see, we didn't have a price gap above the trend line here, so there really wasn't an opportunity to take a trade. Now, as you can see, this trend line drawn against this extreme continued on lower here. We did, in fact, have a price gap at this point here. So again, this is alerting me to a buy-side trading opportunity. And again, the way I like to take advantage of these is the bar that does the gapping, or that gaps up. I like to have an order in 1 tick above the high of that bar, and then the low of the bar is going to be my initial protective stop. And as you can see, the trade was subsequently triggered and price is pushed on higher here. Now, even if I had not drawn that initial trend line here, and say tried to employ what I mentioned in the previous section, utilizing the triple fan, here's my first point here, my second point, my third point, and again, we have the gap above the trend line, again signaling a nice buy side or a highly reliable buy side trading opportunity. And again, the way I would trade it would be the high of the bar that does the gapping. One tick above there would be my entry price, and my initial protective stop would be the low prior to the gap, the low of the bar. Now this is just a very quick example of, again, one of my favorite trend line trade setups. Again, there are a number of trade setups trend lines do indeed offer. But with regard to the number that are out there, these are my two favorite. And this is the first one going to be the gap either above or below a trend line. And the second one I'll be talking about shortly will be the retest. Let's take a look at a few more examples. Let's take a look at cotton. Simply connect two extremes, either two extreme lows or two extreme highs. In this instance, I'm just simply connecting this low with this low, and that gives me a nice trend line to work with. And as you can see, prices came down down to that trend line and really played around with it for a little while before breaking lower. But as you can see, this bar right here was indeed a gap below the trend line. So I would initiate a sell position on a break of the low of this bar with a stop, initial protective stop, the high of the bar preceding the gap, which would be right here. And as you can see, this led to a very, very nice trade. And let me just show you a few more examples. Again, connecting two extremes, two highs, two lows. In this instance, two highs. And as you can see here, prices did indeed gap above the trend line. So that would be my a move above the high of the bar that does the gapping. That's where I put my order into the buy side. And the low of the bar preceding the gap is where my initial protective stop would go. And again, as you can see, this did indeed lead to a very nice profitable trade to the upside. And again over here, I'm just simply connecting two extremes, two lows, right here and right here. And as you can see, there was a gap below the trend line. Again, these are very reliable trend line trade setups. They don't occur that often, but when they do, again, they're very reliable. And this is how I like to trade them. In this instance, we have a short trade setup. Once prices trade below the low of the bar that does the gap, either the gap up or the gap down, that's my entry. And then the high of the bar preceding the gap, the high of this bar is my initial protective stop. So that's another example of my gapping technique with regard to trend lines. And let me just show you one more market. Again, just a simple trend line drawn against the highs, the price highs of the move. This high against this high, also this high here. As you can see, there's a small little price gap right here. So the way I would have handled this would have been to put in an entry to the buy side, one tick above the extreme of the bar that did the gap. And then my initial protective stop would be the low of the bar preceding the gap. So this is my trend line trade setup, or my gap technique with regard to trend lines, and this is a very reliable setup. It doesn't occur that often, but when it does indeed introduce some sizable moves in price that from a trading perspective I think are indeed worthwhile.
شكرا لك على مشاهدة الفيديو. من فضلك ضع لايك واشتراك في القناة تشجيعا لنا على تقديم الأفضل في القادم إن شاء الله.